Hey everyone, my name's Jason and today we'll be talking about gross profit margins. So gross profit margins are a crucial metric that every entrepreneur should be measuring about their business. Basically what GP margins or gross profit margins seek to achieve is give you an understanding of the profit you're making at a product level. So basically it's when you make a sale, what's the profit after I take away all the costs attributable to that sale. Now it's super important because you want to understand what profit you're making at a product level, so you ensure that you have enough remaining profit to reinvest back into your business, like your marketing, your sales, making sure your staff are happy and all that good stuff. So how's it calculated? So pretty simply, gross profit margin is calculated as your sales less your cost of sales. It's usually expressed as a percentage. So to get the percentage is simply your gross profit dollars divided by the sales for the period that you're looking at. Really importantly, what's in cost of sales? So if you're in a services-based business, say if you're a digital agency or an accounting firm, your product is really the people behind it. So the people that are actually doing the work. So it's really important that you actually attribute any wage costs for your revenue generating employees. If you move them up to the cost of sales line, it gives you a better indication of the margins you're making at that rate. E-commerce businesses or inventory based businesses, basically it's all product costs attributable to the product that you're selling. So it might be the raw goods, it might be the shipping costs, eBay fees, all those costs are attributable to getting the product in, buying it and shipping it out. All those expenses should be attributable to your cost of sales. Software as a service business, so tech startups. There's a bit of a controversial topic as to what should be actually included in the cost of sales lines. Basically, as a minimum, your hosting costs should be at least there. So if you're in the server fees, etc. There's debate as to whether customer success costs for your wages should be moved up to the cost of sales line. Our view at SmartBooks is that they should be as below the line in separate area under customer acquisition costs. Reason behind this is because customer success teams are essentially like salespeople. They help to reduce churn and delight your current customers so they can on go and refer more clients to you. So that's all the good stuff. So best practice in terms of reviewing your gross profit margins, and we say that in your own mind you should know what profit you need to be making or what dollars you need to be selling at to make an adequate gross profit. Every time, so your salespeople need to be educated on that. But basically, to reaffirm, we're data-driven people. We need to vouch that every month you should be looking at financial statements and reviewing the gross profit levels that you're making in business. So financial statements, review them monthly at least. Super important because the cost of sales measure is so critical to the output of what margin you're making. Super important that you have your chart of accounts set up right from the start. So making sure that you are attributing your revenue generating employees to cost of sales. You're making sure that your eBay costs move up to the top line, because if everything's bunched in together into one account, you have zero clarity as to where if you're making a margin at that level or not. So super important. And the $1 million question: how to improve your gross profit margins. So 4 really simple basic tips on how to do that. The first one is obviously to increase your prices. You'd be amazed at the results of just simply increasing your sales in terms of pricing instead of volume. To the customer, it may not seem a lot, but to your bottom line, it all adds up. It's significant. Second tip: reduce your cost of sales. So look at ways you can try to reduce your costs at the product level. Things might be constantly reviewing supply lists and ensuring that you're really getting the best deals out in the market. You can maybe look to seek economies of scale. So if you join group buying arrangements where you can start to get bigger discounts on that. Product mix is super important. So if you're like most businesses, we have a range of services or products to sell, and some products will have a higher margin than others. So it's really important that you have the data to be able to understand what products are more profitable to your business and which are the lower profitability items, and then understanding the mix of those. So if I want to quickly get some quick wins, I can increase the volume of my high margin products, and that will essentially give me a better profitability margin at the end of the day. So really simple tip there. And the last one, inventory levels. So making sure that you're not carrying any really obsolete stock, because ultimately carrying stock will impact your profitability and working capital at the end of the day. So that's it. Thank you for joining us, and I hope you got some value out of this video. See you later.